Hey everyone, I'm Hans Albrecht. I was a pro options maker for 15 years and an options income fund manager. Decade after that, with $1 billion managed, I ran a large suite of AI, big data, robot funds, portfolio manager that invested in all of this stuff. I actually recommended NVIDIA at $4 pre-split about, what was that, like 6 years ago. So as always, this is for educational purposes only. Your trade, your responsibility. And if you guys are okay with that, let's dig right in. Please like and subscribe. Grab my free ebooks down in the description below. These are actionable blueprints that are going to give you pro insights from an actual pro. So you're going to learn a little bit about how to do this. Now, my last video showed how I traded a strong move in IBIT, which is the Bitcoin ETF, the most popular one, very, very liquid. And I traded it with covered calls, right? So when we talk about income trading, it's generally sort of some version of cash secured puts, covered calls, maybe verticals, credit spreads, things like that, maybe some slightly more exotic things. And I made more in this huge up move that we've had over the last couple of months than I would have made if I had not done income trades. Now, understand this is very unusual, especially on a large move to the upside. So I ran $750 million in options income funds for a decade. And the income funds generally are things that give up upside for most people. So if you've traded covered calls, I think you know what I'm talking about, right? You kind of get run over to the upside. And remember, cover calls and even downside puts, if you think of cash secured puts, they're just a sort of synthetic cover call. Those are the same trades, basically, different strikes. People don't realize that, but this is kind of the same concept, right? You're giving up some upside and you're retaining a lot of the downside. So, but with income trades, you're sort of getting something in return for something else. You're getting cash flow, but you're potentially giving up something, which is that right to some of the upside if it's a stronger move. So if you look at any cover call fund performance over time, look at the JPM Caller Fund, for example, that has gotten run over again and again and again to the upside on the calls. Performance is given up over time. Yes, you can successfully do it for a month or two, but over time, trust me, these funds give up plenty of upside. And so that's okay if you really want to focus purely on income. But my approach and what I've developed over the decades is something, and certainly a reason why a lot of people come to me, and that's it, the last stop for them, because I tell them things that nobody else tells them. A lot of wealthy people come to me is they say, listen, I like income, but I want to retain that upside, right? I want to maximize my performance. And that's what we do. And that's what crypto income is all about, maximizing your performance. Nobody does it this way. I actually revolutionized the way that ETFs in that income space approach things because of the market maker background. Not to talk myself up too much, just people just didn't have that knowledge, right? So I came from this quantitative background, volatility arbitrage, and I said, you guys are doing things kind of stupidly here. You're giving up too much of the upside. And so long story short, you can do this better. That's what crypto income is about. That's what some of my other programs are about. Much of the time, the market wants to do more of the work for you, right? Why get in the way? Why are you involved in markets? Why do you want to be a part of NVIDIA or some other great stock that has massive upside if you're just going to completely give up the upside all the time? So when it's time to get greedy, and there is a time for that, you can turbocharge your upside. And that's why we're going to use these turbo trades as well in the program to grab those explosive moves to the upside. And we're going to structure one of those today right here in this video. So stay tuned. That's what this is all about. There are no guarantees. These are markets, but there are better ways to do things. Okay, so quickly on Ethereum itself, and this is big, so pay attention. So imagine you've got this sort of magic wallet full of these digital dollars that you've been hearing about for years and years. Digital dollars, digital gold. Okay, Hans, I've heard it before. So imagine you've got this US dollar coin, DAI, something like that. Every time you send, spend, save those dollars, it's going to travel across this secure, if Ethereum becomes this backbone, which it seems to be, this secure decentralized network called Ethereum. So think of Ethereum as becoming this sort of digital highway that is going to replace things like Visa, PayPal, other remittance type things that occur out there. without the middleman. So think of a lot of what technology does is it's finding a way to eliminate the middleman, right? It's saying, listen, customer, I'm going to give you something cheaper. I'm going to make it faster. I'm going to make, we're going to get rid of the layer that pushes up prices. And people are going to be very supportive of this. Governments are going to be supportive of this. Everyone's going to be happy to see this happen. No one's going to feel bad for Visa when their margins compress from however many percent to 1/3 of that. They're not going to feel bad for them. So let me give you an example. A worker in Canada sends money to a family in India, cheap, fast. It settles in minutes using stablecoin via the Ethereum network. A gamer, number two, earns USDT in some sort of blockchain game. They buy some new gear. What happens? They don't go through a bank, no delays. They go right through that network. This is becoming very real. And this is why Visa is terrified. So think about it. The moats, big moats, are turning into puddles. They're turning into tiny streams. This is a very, very new world that we're in right now. So think of Bitcoin as a store of value, digital gold. Okay, fine. Ethereum is useful. It has utility. It's infrastructure. It's programmable money. Okay, so let's talk about this regulation tailwind, right? We had the Genius Act signed by Trump. He's a very big fan of crypto. He's going to make a lot of money when crypto does well, if crypto does well, if and when crypto does well. So this is real, right? So this gives the green light for what we're seeing here. On the left, bottom left here, this is from McKinsey. This is real. It's happening. Stablecoins are transforming payments globally. Tailwinds are going to cause a material shift across the payments industry. This is happening, right? And Ethereum really looks like it may be kind of in the driver's seat here. So Bank of America says stablecoin demand is going to drive Ethereum usage across payments, remittances, commerce, institutional treasury workflows, right? This becomes a utility flywheel, utility, usefulness, real world stuff here. Okay, let's talk about the turbo trade. This is one of the various strategies that we use in our crypto income program. So we are going to do it on Ethereum right here. So let's take a look at the options chain. We're going to talk about how this is a kind of trade that really gives you a number of different things. It allows you to be patient. And that's a very big thing when you're trading options, when you're trading for direction, particularly, you don't want to have that sense of urgency. Like, man, if I'm not right tomorrow or next week or the week after, I'm going to be in trouble here. This is a position that has an internal embedded sort of offset that takes care of that one issue that we get with the options buying, which is that erosion, that decay. So I'll show you how that works. We're going to structure the trade, and I'm going to show you how it can pay off. Let's take a look at the options pricing right now. We can see the shorter term option pricing kind of pushing up a little bit and starting to relax a little bit more, which is kind of interesting given a little bit of the explosive move that we had recently. So let's take a look at the skew. We've had a little bit steeper upside than is usual, and that makes sense, right? When something starts to go parabolic, you get that excitement to the upside. People are buying out of the money calls. They're getting excited about further upside. Sometimes that can be a sign of exhaustion, and what we're going to see is that was in fact a little bit of a sign of exhaustion. So let's refresh this chart here. We can see here anything below that zero line means calls more expensive than puts, and then above the zero line means puts more expensive than calls. So you can see that really kind of blew out a little bit here, which is basically where it started to maybe relax a little bit. Kind of did this, another move, blew out. I like to see it get back to that zero line. That's where I start to feel like, okay, the upside maybe is back in play again, because when people are too excited, maybe it's time for this thing to cool off. So we're actually not too far from that upside. That gives me a little bit of confidence in this play. I mean, I feel like fundamentally we have that upside, but I feel like it's also kind of, there's a little bit of the excitement just wearing off in the last week or so. So I like that. So, and we can see if we look out, because we're not going to be dealing with 30-day options, we're going to be dealing with something a little bit further out. So if we go out to say December of this year. Okay, so we've got the expiry December 19th, right before Christmas 2025. So if I go down in here, typically I would look for maybe kind of a 19 to 24, 25 delta. I think if you're a little bit more aggressive, a little bit more bullish, you could push that up to that 25, maybe even a 28 delta for that short put. For right now, I'd say you could do the 25 strike put. You could sell those for probably about 270. And then if you go down about $5, you get these for maybe about 115. So 270, 115. What do you got there? About a buck 55. So buck 55 credit. And then what you're going to do is you're going to do that's your kind of your income trade, right? I think that's not bad. You're playing that downside skew, as I said. That's going to price a little better when you get that downside skew working favorably for you, which tends to happen in many stocks. That's why the turbo is a very much a pro trade. This is a trade like when I talk about the trades with friends who are pros who do volatility arbitrage, who are market makers, things like that. This is exactly the kind of trade that is very favorable because it has pricing power from a volatility standpoint, right? You're getting pricing edge when you're selling expensive vol to buy cheaper upside vol. That is giving you an advantage, right? So it's not a guarantee that something's going to work out, but it's at least you're putting something, on your side. So I'm going to get that buck 50, buck 55 credit. Then I'm going to go out here and I'm going to pick up. I'm thinking maybe like a 33 or a 34 call. Let's say we grab that 34 call for 325. What that's going to do is get our cost down to about a buck 75. So we're basically going to put this trade on this upside potential we're putting on for a buck 75. Now I think this thing has the potential to maybe go to, I think Ethereum could get to 10,000, right? So let's say we could even sort of 2.5 times it, maybe up to even 3 times it. This is something that could maybe get to around $80, something like that. So $80, less let's say our 34 strike is going to give us a 70, sorry, what is that? $80 minus our 34 strikes going to give us a $46 move. For the $46 move, and if we kind of have about a couple bucks invested in there, we can maybe make 20 times our money on something like this. So this is not something that I would say you're going to put a massive amount of money in. But if you really have a good conviction on Ethereum, this is a way you can really move the needle. This is going to give you full convexity. Now, what some people might do is they might do a call spread here. So you might buy a call and then sell an outer call. To get you, if you sell it far enough out, you're actually going to get some decent skew, right? So that's going to probably, a call spread is going to price quite nicely. In the SOXL lately, I made a ton of money on those Jan 23 calls. So I've rolled some of them into an upside call spread where the pricing is favorable and it allows me to put a whole bunch of money in my pocket, but still maintain upside. So on the initial trade, I don't like to do the call spread. I want to I have a good feeling about this, right? I have a thesis that I want to play out. Now, after we get a nice move, if this thing moves up to 40, $50, that is where we can start to think of maybe monetizing, rolling up to a structure that's not going to cost us very much, but will still maintain upside, right? There's one thing I hate, it's getting rid of a trade only to see it just continue and continue and continue. So I always like to keep a little bit of upside, and that rolling process can really, really work for you. So that's the trade. Basically, you're going to sell this downside put spread, which I'm gonna do a little bit more of tomorrow. I've already picked up some leaps actually, so we can do that in another video. In Leaps Trader, we're going to be doing those, which has been a phenomenal success. Really happy that all the members have come aboard. It was incredible testimonials, incredible reviews, and appreciation, and I'm really touched by all that. But anyway, this is going to be our crypto income program, and we're going to do a whole bunch of cool type things in here, and this is one of them. So I hope you guys enjoyed that. Let's see how this works out. We're going to keep track over time, and that's it. We'll see you in the next video.